Hey traders, I want to take this opportunity to update us on the video I did last week. I think it was last week. I did a video prepping us on gigacaps, megacaps, the FANG gang, Microsoft, Apple, because of their earnings. They all report this week except for Netflix and Tesla, which already reported. So it's a deluge of huge companies doing some fantastic things. So today is 10/26. This evening we had Alphabet report, for example. Facebook reported yesterday, and Google reported tonight. Twitter also reported. A whole bunch of others reported. So I'm going to try to do a few videos to help us trade the action for the next couple of days. So first of all, let me start by saying that I've told you before, please stop thinking about taking trades for the earnings. Some people come to me and say, hey, I bought calls for the earnings because I think they're going to deliver a beat. Please stop doing that, in my opinion, because this is another data point that proves a fact. It's not my opinion. It is fact, data-driven fact, that the move on earnings the next day has almost nothing to do with the quality of the report. You're saying you still don't believe me. I've showed you facts on a chart. Let me show you another one today. This one, Google. They beat earnings expectations, the estimates. They didn't have a miss. Okay? They beat the top line, they beat the bottom line expectations, which is, in my opinion, a bullcrap number anyway, somebody's opinion of the stock. I stick to the facts. So you're saying, okay, so if they didn't beat estimates, they didn't miss on estimates and the stock fell, then it must be that they did worse than last year. Not so. They beat earnings from last year by 70%. 70%. A company this size. They beat the top line sales by 40%. A company this size. Those are astonishing numbers. Okay? They're unbelievable numbers. What does the stock do? A beat on all counts, incredible growth, it fell. So it's not about the quality of the report. Please. All right, on to the trade. I have specific ways to trade this sucker tomorrow. All right, so after hours, the stock went nuts. It rallied, popped, and then it fell, and then it's somewhere in the middle right now. And let me show you how it worked out. Okay, so this is the aftermarket action, this section right here. It closed, and then they released the earnings. You can see the little bell there, and they went nuts to 28.15, and then they fell apart to 2700, and they're somewhere in the middle. A little down to where they closed. So it's red right now. How do I use this information for tomorrow? It's very simple. Let me point those things out first of all. 28.15 is right there. 2700 is right there. Now, how neat is that? Look, 2700, 2700, 2700. They've been in play for a while. Okay, 28.15 has been in play for a while. So, for the next couple of days, especially for tomorrow morning, that's my playground. So let's go back to this one. So that is my playground. This is the top end of the range. This is the bottom end of the range. So why do I say that? They came out with the news. They were super happy. That's all they could do. And then they were like super upset, and that's all they could do. So anything for the next few hours tomorrow is going to ping pong between these two levels. I'm going to venture to guess that they're going to test both sides sometimes tomorrow. So if it opens and it rallies up to here, and this is not where I get excited about it. I don't start longs in here, anywhere near here. I start them up here, if they get to it. Okay, because that's where they failed. They're going to fail again, at least for the first time. That's my experience. Conversely, if they open and they fall straight down to here, that's not where I start panicking out of my longs. That's not where I start buying puts and put spreads to short it. Here, yes, and I'll tell you why in a second. If it loses this number significantly with like oomph, then I don't know how far down they'll go. I actually do. The target should be 2620-ish with 2660 support. So There's going to be support here, not here, or it's going to 2620. I don't want to find out. If I'm long, I'm out right here. I'm not out at 2700 because they're going to test it. They're probably going to bounce. Okay, so I won't be so depressed panicking out here. I won't be overly exuberant here. I would be here or here. Okay, so if I have a trade calls and this pop, I consider it a gift. I'm out if I took it for the earnings. If I took the trade for the earnings and the price fell straight to here, too late to panic. I should wait to see if it's going to bounce back. It probably will bounce. How high is what I don't know. But if it bounces to here, I close it here better than closing it here. Way better. So it'll be a small loss. If it falls below here, I'm out. If it runs into here and I get out of my longs and then I see it running without me, so be it. It happens. It's better than the alternative. Okay, so again, that's the playground. It should ping pong inside the playground until one of the sides fail. Then they'll run in that direction for a little bit. So if it breaks above here, they could do this, and I'm going to guess they're going to get to 2860, 50, 60, and start failing. So if I wanted a long run on Google, I should wait to 2870 or more. When they clear the highs from October 20th, then they can get to wherever they want to go. That's my personal opinion. I won't touch it unless it clears 2869, 2870. I won't panic into 2700. In fact, I will try to catch the falling knife here with stop. It means if it falls below 2700, I'm out. I was wrong. I don't know where it's going. I'll catch it at 2620. In fact, I do know 2620. So I will try to catch it here on as a falling knife. If it fails, I'm out. I'll try again here. If that fails, then the market's in trouble because it's going to 2500-ish. Okay, so I don't think that's going to happen. I'm still optimistic about the market. I think the more mega caps that report and don't collapse, the less uncertainty, the more bullish people get, because everybody, they don't want to touch the market. What if all those giga caps fall apart, right? So if tomorrow they're okay, I think a big sigh of relief. We still have the beasts to come later this week, but half the beasts are out. Okay, so that's Google. Use this logic to trade the other ones. Find out what's the overnight low, what's the overnight high, and that's your playground for the first few hours in the day. Ping pong inside that, and then chase, if you want, chase the breakout from either sides, breakout or breakdown. So different decisions depending of if I'm long already or short already, or if I'm looking to get long or looking to get short. So I'm going to assume it from the position, argue from the position, I'm already long. If it gets to here, I'm out. I'm already long. If it gets to here, I don't panic. I wait for a potential bounce. Halfway up, I'll bail out on the better terms if I didn't get out here fast enough. If I bought put spreads and it got up to here, same deal. I don't close them. They're probably going to revert lower. I'll probably have a chance to close them for better money if I didn't close them up here quickly. If I bought put spreads and it fall down to here, I should book my win because I guessed it right. It went my way. It's probably going to bounce to 2700 off of 2700 at least once. All right, so that's the plan of action for the Google machine.